Hi, I'm Emma Morgan, a portfolio manager here at Morningstar Investment Management. This is our 2018 fourth quarter update. This quarter produced one of the largest sell-offs we've seen in many years, with many equity markets down double digits and bonds rising. 2018 was a pretty bruising year overall, with most equity markets down. Although the portfolios delivered a negative absolute return over the quarter, they were relatively well positioned, with less exposure to equities than normal and healthy allocations to the more resilient parts of the market. Within equities, our cautious stance towards US equities was beneficial, as this was the worst performing part of the market. This quarter demonstrated that expensive markets, which appear to have fantastic prospects, can still fall very sharply when investors reevaluate the outlook. Even after the fall, our valuation analysis shows that the market is still very expensive, and we have maintained our cautious stance. Overall, our preference for emerging market assets, both equities and bonds, was also beneficial as they outperformed developed markets. In fact, emerging market bonds actually rose in value during the quarter. This is a really good example of what happens when assets fall heavily out of favour, are sold off, and have very bad future scenarios priced in. Elsewhere, our UK equity position fell in the final quarter, although it did hold up much better than many of the other regions. Investors continue to fret about the impact of Brexit on both the pound and UK equities. What's interesting to us, though, is that the focus of the impact of Brexit on the UK economy has led to the UK stock market falling out of favour when the long-term growth prospects are actually driven more by global than local factors. We maintain our positive stance towards that region. Within fixed income, government bonds and particularly US Treasuries rose in the risk-off environment, and that helped to reduce the burden of falling equities. On the other hand, positions in inflation-linked bonds and credit held back performance. Cash proved a really good investment over the quarter and over the year and helped to mitigate the impact of some of these equity falls. This quarter, and indeed 2018, was a reminder that risk management is important for multi-asset portfolios and that they need to be positioned to be able to cope with not just the good times, but also with the situations where markets get expensive and risks are higher than usual. Thank you for joining us.